How we doing today, crypto warriors? This is Bitcoin Zay, and we are here with another tutorial on BitMEX margin trading. BitMEX is one of those websites we have discussed before. However, margin trading is very risky, very high risk, also high reward. But we do want to encourage people to trade based on their abilities. And this lesson will show you how to start some trading strategies, as well as the different products they offer. Um, and we'll get into trading on the testnet later. So let's go ahead and jump right in with BitMEX. So first things first is if you want to register with BitMEX, first thing you'll have to do is a VPN setup. So I have a Nord VPN, which is pretty good, actually very good VPN to use. I'll go ahead and connect mine now. So as you can see, connect your VPN. Boom, mine's connected. And now that it's connected, next thing you need to do, go back, is to set up the testnet or your email for the testnet, because BitMEX, as you can see, they have bitmex.com. However, they have a testnet to test your trading, to try and different strategies, things of that nature. And that's what we're going to use to show you some of the different strategies. So the first thing you want to do is connect to your VPN. Next thing is you want to register with BitMEX testnet. So you'll click register, and once you have to register, you'll want to put in a different email address. You'll definitely want to use a secure password and whatever country of residence you have, along with your first and last name, which is up to you. So you accept terms of services and you register from there. So once you have your email address registered and you are able to log in on the testnet, as soon as you log in for the first time, the first thing you'll see is this interface. And one of the things you want to look at first, once you come to the interface, is you want to read through the references that they have. We'll go through some of the stuff today, perpetual contracts, things of that nature, liquidations, futures. We'll get into altcoins on the part 2 of this on Thursday. However, today we're going to focus on the Bitcoin products they have. But you want to make sure you go through and read the references here, the frequently asked questions, some of the fee structure that they have, the maker and taker fee, long funding and short funding, the funding intervals, and we'll go through all that stuff, what it means, how you can use it. Also the same thing with traditional futures, how you can use them as well. So you'll want to read through it yourself even after watching this video, but we will go through it because it is a lot of reading, and you want to make sure you have a good understanding before you jump into any type of margin trading. So first things first, one of the best features they have here is that you can actually customize this advanced UI. As you can see, if you click it on the side, they have the ability for you to make your screen look as good as possible. So for instance, let's say you don't want this here as much, you'd rather have it here. Whenever I set mine up, I actually like to have my chart front and center, and you can space it out, make it as wide as you want. This is your actual chart you use. You can adjust the time periods here, different 4 hour, 1 day, right here. You can actually make the chart bigger, actually expand it, so you can actually do some TA, which I'll show in a little bit, in order to do some scalps. And one of the best features as well, when you move it around, is you can see the recent trades that are going on. You can actually view your wallet balance, which when you get in testnet, they'll start you off with 0.1 Bitcoin to start, and you can actually play with that either until you run out or until you feel like you're comfortable doing it in the real BitMEX. So this is a way to customize it. Like I said before, you can change it how you want, shorten it, lengthen it. This is your open positions tab. So if you have any open positions, they'll be here. These are active orders, the buys and sales you have, which will show down there, and the indices showing the last price, mark price, the different instruments, different change, and also the reference symbols. So this is the interface you can adjust on the left side here. As you can see, if we start off on limit, A limit order is an order that you place at a certain price, and once that order is filled, you have that position. And right here, we'll get into buys and sells in a little bit. However, right now, I just wanted to show you the interface. Let's go back. So before we get into exactly how to use it, why margin trading? One of the best things about our group is we want to make sure you can hedge against the BTC price, the Bitcoin price, because it does actually increase and decrease. You do have a actual market. You can gain Bitcoin based on the market, either long or short. That's why we always say it doesn't matter what the market does. If you're smart, you can always gain more Bitcoin. But it is high reward on Bitcoin and altcoins. Some people see this as a positive, like myself, because if you know what you're doing, you have a strategy, that risk, you can limit it and still get high reward. So that's why you would margin trade. So exactly what is margin trading for anyone who's new to it? It's essentially borrowing money based on Bitcoin. XBT is the symbol they use for their perpetual swap contracts. You borrow money to purchase a contract. A contract is literally a $1 to 1 contract ratio. So for every contract you have, it costs $1. So if you have 1,000 contracts, that's $1,000. 10,000 contracts, $10,000, so on and so forth. And if you can't cover your loss, you'll get what they call margin called or liquidated, which you may have seen if you're new to it. You may have seen people talk about liquidations, things of that nature. Basically, if you don't have the money to pay back on the loan that you took out on your trade, they will basically take the money that you put up for it and you will get liquidated. So some of the BitMEX products, which we'll get into, first things first is how to take a long and short position. We'll show with perpetual contracts exactly what they mean. Perpetual basically means that the contract cannot expire. With futures, that contract does have an expiring date. So what that means is that at a certain point, those futures, that contract expires, and whatever your position is, you will be, given the money from that, or you'll lose the money from it, depending on where you stand. Leverage, BitMEX has up to 100 times leverage, which we'll discuss, and also funding. They have a funding rate, which basically makes them liquid enough to disseminate the money amongst the retail traders. So we'll get into what that means. So first, let's talk about taking a long or short position. I know people see this a lot in the Discord group, and we'll discuss very quickly how you can take a long or short position. So we'll start right here with a $1 contract right here based in USD. If we wanted to set a limit price, just for this example, let's say 7,600. Then basically what you're saying is you want to buy one contract at $7,600. Now you can even take a long position here, or you can sell short. However, either of these positions, you will have to make sure you have the money available, which we do, which is 0.1. So a little bit more. Let's do $100, just so you can actually see that cost. They actually show you the cost right there. The cost at point. That's how much it would be to short, and that's your order value. 0.01 XBT is how much it would be at cross leverage, which cross we'll get into leverage later, but basically you use your entire account to do it. So right here, if you wanted to make this purchase, you would simply press buy. And what this limit order does is it tells you, which is good, you can buy 100 contracts at 7,600. It lets you choose your leverage. 1x, meaning if you wanted to buy, well, we'll get into leverage in a little bit, but basically this shows your position. If you took it across, it shows you the order value, how much it cost you, because with cross, like I said, it's a little complicated, but they give you 100x if you use your entire account. If you get liquidated, you lose your entire account. So that's sort of why the actual cross is very, very, very risky. Position size after execution will be 100 contracts. The mark price shows the combination of different exchanges priced together. Basically, this mark price is what will get you liquidated. Whenever this price is hit, that is the price that gets you liquidated. And this is your liquidation price, meaning that if it ever gets below $885, then your entire account will be taken. So I can be pretty confident in taking this long order, and I'll take a market order instead, just so you can actually see it, because this one might not get filled. But that is essentially how you take a long position. And if you do the same, let's say for instance you do some charting. Let's say you're doing some scalping, and let's see, you open your chart up here. We can open one of our indicators. Let's just start with Bollinger Bands. And let's say you throw in your Bollinger Bands indicator, and you say to yourself, well, this one is disrespecting the top Bollinger Band a lot. I think that this price may actually change. Let me actually change these settings here on the Bollinger Bands, because you can't really see it. We need our median line to actually to pop a little bit. And let's get this. This is usually how I do mine. And you want to make sure that background is really white so you can see it. And you want to make sure it's a little thicker. That's what I do. So as you can see it a little bit better here. You, like I said, I'm not in a position right now, but if you say to yourself, hey, this is actually disrespecting, I want to take a short position, you can actually say, all right, if it hits this level, and if you actually, going through doing different charts, you can say, oh, if it hits this level, I want to take a short position at 77.40. So you can say, I want 100 positions at 77.40, and I want to sell short. So if it hits that price at that level, I want to short from 77.40. And then once again on cross, it shows you your order value, your cost, the available balance, as well as your liquidation price. So basically, the price of Bitcoin has to go to what's that, 10 million? I'm sorry, 100 million in order for you to get liquidated. So you can be pretty confident that you won't get liquidated with 100 contracts here. So that's why we say risk-wise, if you lower your risk, you can be pretty confident. But let's jump back here. Let's jump into perpetual contracts. And that is exactly what I've been showing you. XBT is perpetual contracts. These contracts do not expire, and you have the ability to open a position and hold it as long as you want and close it either at a loss or at a certain gain. So let's take a look over here to the left so you can see perpetual contracts, how they actually work. So first things first, the BitMEX index price, they have their actual price there. They show you the 24-hour volume, open interest, and they actually show you the funding rate here. The funding rate basically, we'll show that a little bit later, but it's a good indicator for where things are headed based on the different percentage that they have. Also, contract value, like we stated, is $1. So let's get into a few leverage trades so you can see what I mean. So 1x, as you can see, let's say with $100, we wanted to take a 1x short position here. This shows you how much it costs at 1x, 0.0129, and how much your order value, because basically you take the cost and you multiply it by your leverage. This is a very low leverage, and as you can see, your liquidation price is at 1.5 million pretty much. So you can be pretty confident that you won't get your money taken anytime soon unless Bitcoin goes to 1 million. And same thing with a buy position. If I said I wanted to open a buy position at 75.40 on 1x, I wouldn't get liquidated until the price went to 37.87. So the difference is, like we said on 1x, very, very low risk of getting margin called. However, when you open that order, or whenever you say you have that order, you definitely want to get the value out of it and not hold it too long. So that's one of the things with leverage. Let's look at some more leverage stuff. For example, if you wanted to buy 100, now we have 2x. So it costs you twice. Your order value is the same, but it costs you 2 times less. And basically what that does is give you the ability to bet less money and borrow money in order, like we stated before, to have a position on margin. However, like we've stated before, it is very risky, because if you sell at a loss, you can lose a good amount of Bitcoin. So like we said here, liquidation price, and if you keep increasing it, which we'll do here, as you can see the price, order value, and the cost is less to you. The higher you raise the margin, as you can see, the liquidation price gets closer and closer. So that's the skill that is involved, meaning that if you can get as close to a top or bottom as possible, and your liquidation is low enough that you don't get liquidated, then you have taken a great position. And we'll get into stop losses in a little bit in order to show you what we mean. So as you can see, increase the leverage 25x. Look at 25 times that, and that's your order value, but you only are putting up this amount right here. So, but look at your liquidation price, very, very close. 50x, even riskier. At 50x, your liquidation price is literally $11 away. So if it happened to just hit 76.54, right now you get liquidated instantly. And I kind of don't want to get into 100x simply because most people get liquidated almost instantly. As you can see here, your liquidation price is 75.77. It's already above that. So as soon as you open this position, you would already be liquidated instantly. So that's happened a few times to people who are new. You don't want to do that. Make sure you check out that liquidation price. And as far as trading goes on leverage, I tend to keep it at 10x and below, and then increase the leverage as the price goes up or as the price goes down, because that will change your actual order. So that's perpetual limit contracts. For market orders, let's jump back here, and we'll get into futures later. For market orders, what this does is your limit price, you set a price you want to buy it at, but market order is you purchase it exactly at the price it is now. That price is determined by the mark price here. It's the current price, and as you can see here, the fair market, they actually have the actual fair index price here. So their index is actually a few different exchanges combined together, which is different from their actual listed price here. So you got to be careful with liquidations, because this is the actual price that counts for your liquidation. So let's say, for instance, we wanted to market buy. Let's say we want to take a long position at 76.49. Actually, at this point, just doing some quick, 5-minute charts here if you wanted to look. As you can see, touching the top of that band 1, 2, 3 times. And as you can see right here, if we zoom in a little more, still sitting up there. So let's say we wanted to take a sell position right now. 100 contracts at 10x. Our liquidation price is 84.51.5. Like I said, it's only going to cost us 0.0013 bitcoins, and this shows the difference in liquidation price. So let's just go ahead and take that position now. So if you push sell, boom, as you can see, orders filled, 100 contracts at the price that it was when you took it, and it also shows that order submitted. You'll also get sometimes here where it'll show you unable to update your order because it's the BitMEX system is down, or BitMEX isn't working. When bots are running really fast on this platform and they're actually trading at a high volume, it's pretty hard to get an order. So I wouldn't suggest trying to just market buy your way throughout. I would have targets and use limit, but market buying can be good on confirmed breakouts, simply because you can actually get in at a fair price if you know we're passing a distinct level. So like I said before, once you have your open positions, you can move this around. We have $100 worth of Bitcoin open at this is how much it costs, 0.013 Bitcoin. This is our entry price, meaning we have a short position open at this price. This is the mark price, meaning that's the price. This will change as you go. This is our liquidation price, meaning that at 84.51 and 50 cents, we will lose this entire order if it hits that price, which is what we will show you right now. Stop loss. Let's scoot on over. Stop loss. So let's say, for instance, you take this position and you say, well, if it actually makes it past, we got a short position 76.49, and we say to ourselves, well, right now the daily high is 77.69. We say to ourselves, if it passes the price of 77.69, sorry, right here at the stop market, you put the quantity that you want to sell at the price that you want to sell it, or buy, because what that does is if you have a short position of 100 contracts. You need to buy 100 contracts in order for your total position to be 0. Once that total position is 0, it will take the price that you bought it at, use that percentage, and it will show you how much you made. And one of the nifty things that you can use here is a calculator. Very, very glad that they put this this feature, because doing it by hand is a pain. So you can actually take a look at your liquidation price. You can actually see the profit loss you're trying to get. So let's say, for instance, at the liquidation, let's say we put our quantity of 100, got 100 contracts, we are short. Our entry price is 76.49. Our exit price, let's say if we set our stop loss at 77.60, it will show you on 10x leverage, it'll show you how much you put up, the entry value, your exit value. This is how much it'll be at this price, meaning you'll lose 0.001, which is a 1% loss. And because of the 10x leverage, your ROE is 14.3. And this is what stop losses are able to do. It will basically buy or sell the contract that you have in order to make your position net 0, and it will keep you from losing a large amount of money. So one of the things you can look at when you see these charts, let's get a higher time frame here. When you look at a higher time frame on some of these charts, one of the things you can see, let's get it loaded up here. Let's see. All right, so one of the things you can see that is very obvious on a lot of these charts is what we call stop runs. When you set a stop loss, a lot of traders, what they do is they take a position and they say, well, if it goes below or if it goes above this price, sell, because that means it's a breakout or the price is changing. However, we have seen a lot of examples, as you see here, stop runs, stop run, stop run. Anytime you see very long wicks, if you see a green wick, what this means is that there are shorters who wanted to take a position. Let's say, for instance, you can basically see it here. There are probably shorters who thought, if we get to this key level, well, I'll take another position. I'll take a short position here, and or at this level, sorry, down here. There are probably people who were shorting as this was rising and saying, hey, if it hits that price, I'll short. Ran, as we call it, stop run out, basically executed those orders. So it closes a lot of positions, returning back to the price that it was before, and leaving a lot of retail traders in the dust. Same thing with these wicks, the red wicks as well. When you have a long wick on that, basically what it is what they call it stop runs. People who set stops at a certain price in order, for example, somebody was both ways. You can see there were people taking a lot of positions at this level, at the 6,000 level, because a lot of people were doing high leverage trading, trying to basically get in at the market at the lowest price and trying to maximize their potential. But if you set a stop loss anywhere close, $1,000 up or down, you were wiped out. And that's what this market can do when you set stop losses. However, it is one of those things where I wouldn't have taken a position until I see something like this, because what happens is after that, we do see a sideways movement, and then boom, we have the upward movement that everybody was basically anticipating here, just too early. So when you see those wicks, that's what they mean by stop runs. See, stop runs, and we have them a lot on smaller time frames, but I wanted to show you on big time frames how crazy stop runs can get as far as the price. So a little bit there. Let's hop back over here and we'll jump into futures. We've already covered leverage and kind of skipped around, but we'll jump into futures. So let's take a look back. So like we said before, this is a perpetual contract, meaning we can keep this as open as long as we want. And right here, as you can see, there's no date beside it. However, June 8th, I'm sorry, let me get into XBTM. I'm looking at the wrong thing. XBTM is the inverse futures contract. These are contracts that you can take in order to hold long term. However, they do have a closing date. The closing date usually is listed as it is right here. June 29th is when XBTM will close. So this contract will close at XBTM. So basically, if you take a position here, let's do 10 contracts. You can either, let's do a market buy simply because it may not get filled. Very low liquidity, as you can see on the order books, very thin. If you look at the perpetual contracts, uh, order book, as you can see, we're moving millions, hundreds of thousands, different orders. And when you jump over to XBTM, you're starting to see 40, 115. I mean, that's very, very low liquidity. However, they can be useful as a long-term way to hold, because you can buy at a lower price and hold it for the entire contract. So let's do a quick buy here at this price. Mark price is 76.89. So like I said, with market buy, you actually can purchase at the exact price it is right now. And one of the good things you can do too, one of the things that I've done in my own trading world, is you can hedge against your hedge. Basically, if I'm hedging against a certain position that's short term, I can actually open a long term position like this, because I can say, hey, I think this is going to short down to, even though I don't think this is my strategy, I'm just doing this so you can see what it looks like. Let's say I was like, well, I want to short it down to 7,400, and however, I can open this futures contract at 7,400 and say from that point, I don't think the price will be less than that at June 29th. So you can hedge and make money while another position may be losing. And if you have a target, meaning if you have a price that if it goes below it, you want to close your position, you can actually lose a little bit on this first position and then gain the rest back on this this bigger position. Let the winners run, so to say. So that's just one example. I don't want to get into that too much, simply because there are a lot of strategies that go into trading. And if you're like me, you just want to hear one good one and kind of find out from there. So these contracts, the inverse futures contracts, close September 28th. So that is good ways out, meaning that you can take these positions. These are even less liquid. Look at this. 3 million at 9,000. Somebody's definitely trying to sell. 500,000 at 7,400. Somebody's trying to fill that order. So you can see from the future standpoint, very low liquidity, and also look at these prices jumping up and down. But you can, yes, open a position on here as well. So just to show you, if we wanted to market buy here, same thing. Mark price right here, and at what cost, and the estimated liquidation is $100. So if we wanted to open it here, we could. However, futures contracts, I don't really get into them simply because it's such low liquidity, and I would rather scalp simply because I want to get the profit and keep going. Holding these futures contracts, I would do it through a more viable place, maybe CME futures or CBOE, simply because it's more liquidity. So that's just my personal preference. And like I said, we'll get into altcoins on the part 2 video. But as you said before, let's jump back over here. Perpetual contracts, futures, we went through leverage, funding. Yes, let's go to funding. So let's say you have your perpetual contract open at this price. What happens is, as you can see here, in order to keep it quote unquote fair for traders, if you have a large number of shorts that are higher than longs, then opening a long position, I said that backwards. If you have more long positions than short positions, opening a short position will get you a funding rate. So in 7 hours, what happens is 0.375% of what you bought will become your realized P&L, because you'll get paid by the people who are going long. If you're short right now, you'll get paid by people going long. If this turns red, the opposite happens. So if you're short, you get paid, and longs pay you. So basically, what funding does, it takes the leverage that you have, the price that you get it at, and it makes you actually think about whether or not you want to take that position, because you will have to pay a fee if you take a position that is supposedly a obvious one, a winning one, based on the ratio of shorts versus longs. Usually 0.375% is the highest rate. So if it is that high, you will see a large number of people trying to short because they want to get that value. Also, close to the funding rate, you'll see an increase in shorts. Doesn't mean that the price is going to go down. It could actually mean that the price is going to explode up, simply because with more shorts, that is more money, more supply for people who are longing to buy up. So as you can see, even as doing this video, it was at what, 76.49 earlier. We've shot up a few times just doing the orders. These quick movements, I wouldn't suggest trading. I do more of a 1 to 4 hour session. But as you can see, these quick movements, you could have made, a small amount of money so far. However, these positions are so small, you can't really see how much it is. But you can make some good money depending on how long you hold them. So the funding rate, like I said, if you hover over it, this funding rate will show what is predicted. This is the rate that longs will pay shorts. If negative, shorts pay longs. And that's good. If you hover over it, actually tell it to you. And this shows you how much your rebate will be, how much you'll get paid. It's probably somewhere around 0.000, some small amount of Satoshis because it's a $100 order. But once you start getting into the bigger orders, 10 million, 50 million type orders where people have a lot, you have people paying 10 Bitcoins, but it won't matter because with their position, they may gain 40. So that's one of the good things about it. The funding rate, it actually keeps it fair. And let's see. Oh, deleveraging. I'm sorry. That's the one thing I did want to mention. We're on perpetual contracts. So let's say, for instance, we take this short position, right? And we think to ourselves, hey, I have a winning position. And because I have a winning position, I can actually increase my leverage because my liquidation price is still pretty high. So you can actually change your leverage as you go. Let's slide it to 25x. And as you can see, your liquidation price got lower. So what that means is if you're expecting, let's say, to short from here and the price gets down to, let's say, 7,400, which this is an actual strategy to use, you can say to yourself, hey, I'll increase my leverage. It'll cost me less, but I'll still have the same order value. All I'll have to worry about is this liquidation price. And when you have confirmation that this price may not be hit or it may not get to that level anytime soon, that's usually a good time to increase the leverage. Like I've said before, I would keep the leverage at 10x and below liquidation price because let's say, for instance, you have an underwater short, meaning this short is not doing so good right now. The price actually went up to about 7,700. Didn't do a stop loss, which you should never do. You can actually increase or decrease your leverage, which increases the amount of your order, keeps the same position, but you have a higher liquidation price. So you have a less chance of your actual order getting liquidated because in order to get to 9,500, that's a whole another $1,000 increase from what it was before. I mean, you can keep going with this. Like I said, move it down to 3x. In the middle of your order, now your liquidation price is 11,389. But the order that you have increased the amount. So that's the only thing that you have to worry about there as far as deleveraging and auto deleveraging across. Those are the only things you really have to worry about. The simple steps are take a small position with low leverage. As the position increases, increase the leverage. And when you get to a point to sell a small amount and then buy the dip at a certain price, and then you can increase your leverage from there. So it's very simple, man. Just don't get too caught up in the I made this, I made that, because as I'll show you here, they are all over the troll box. If you're on the regular BitMEX, you'll see way more troll box stuff, but on the testnet troll box, people are in here all day. Don't listen to them. Some of them are bots. A lot of them are, oh yeah, buy now, go long now. I mean, it's ridiculous how some people actually read the troll box and go with what they say. When it's like, look here, it's 281 bots, 543. I mean, more than half of them are bots. So don't really listen to the troll box. Don't get your trading strategy from there. It is funny to watch, to kind of look at, but would not trust the troll box as much. Shout out to Polonex. So let's look at a couple of different trading strategies, scalping, funding, and I'll show you live. I've already shown you live on the test how to buy. However, we'll look at some Discord group trading stuff from our technical analysts and show you how to interpret it on BitMEX. So let's go ahead and bring up Discord. So this is one of the recent technical analysis charts that that Nick has put up. One of the best things about his trading strategy, my trading strategy, and Zion, who are other technical analysis, their trading strategies are they use price action and volume and not emotion. You want to actually trade based on what the price is doing, not what you think it will do. So we have certain indicators like volume spikes here. As you can see, when that volume spike happened, very good indicator that we may be reversing the trend. And as he shows you here, these green boxes, places to buy. This order block right here is right here below 73.79. Same thing, order block 67.96, as well as this sell order block at 8,015 up here. So what this basically means is at these prices, you can set limit orders. If you were doing your own TA and you figured, oh, okay, I want to buy at this price, that's what you would do. But just for tutorial sake, I'll use this TA. So let's say, hey, I think the market is going to reverse soon, which I do in June, and a good bounce price to pay would be 73.79, which would have been good if we took this position yesterday. So you would go to your actual BitMEX and you would say, all right, well, position size wise, I want to have a position, a long position. Let's say I wanted to purchase it at, let's go back, I'm sorry, 73.79. You would say, all right, so let's say I get an entry price of 73.79 and have a plan, because if you take that position, you want to say to yourself, well, where's the next resistance, or where's the next place that I could sell, which we provide. If you buy here, one of the things we do is we update it over and over, but I would look target wise. If I bought in this area, target wise, looking for it to bounce up to this 7,900, 8,000 area, which we have here. It's touched the 77.80, so I would say that would probably be a better place to set your sales, simply because that is a local resistance. We just had that resistance recently, and whenever it gets to that point, it may shoot past it, but you do want to take profit in an area where there is a high amount of selling. So we'll put 77.80 because we have already touched that resistance before, looking to touch it again. So let's say we wanted to take a position there, and we're going to start with 10x leverage, and let's do $1,000 there. So we can already see margin, how much it will cost, the value here. The exit value would be, let's see, the exit value with this price, and this is how much your profit or loss would be if you hit that target. What you can do is you can actually change the leverage to see if you increase it, what will happen. You'll make the same thing. However, it's a riskier trade because you take less money. You put less money into the trade. So, but that you can also, look up target price. Same thing. If the entry price is at a certain point, 73.79, leverage is 10, and at a 10%, if you want 100% ROE, that's what your target should be. Usually my ROE, I'm good between 30 and 40%, which is a 3% profit or loss. So we can set that target at 76.07 and I would be happy. However, you do want to maximize your trade. So let's say, for instance, 73.79, we'll take 100 contracts there. Now we'll put a lot more research into taking an order. However, at this rate, I want to actually just show you how to do it. First things first, let me get out of this order. So we have a short order open here. If I wanted to just close it at whatever price, which is what I'm gonna do here, because this is simply for tutorial reasons, you can market buy at 100. And what this will do, the mark price here, it'll cost me nothing because I have no position, what I call a net zero. So let's buy it at 100 because we have a position filled it, and as you can see, because the price was lower than when I first actually sent the order, actually made a small profit off of it, but not really reflected over here. So once you take a trade, before I even show you that, once you take a trade, if you go to your account, you can actually see how much you actually made. So see right here, we just completed this. I actually lost money on this, very small amount, simply because the fee was higher than the percentage that I made. Actually a profitable trade, but the fee was higher, which, like we said before, you want to make sure that you can have profitable trades when you do it and get out. So let's see, like I said before, if you wanted to do a buy order at 73.79, you would set a buy order there, and you can see your liquidation price is 55.71. You could actually increase it if you say, okay, well, I don't think the price is going to go below 7,000, or yeah, I don't think it's going to go below 7. Let's start at 10x. That's the highest I'll go right now. And if that price is actually touched, if it gets down to 73.79, that order is filled. What I want to do is wait for it to fill and then open a target. And the way I will open that target is by saying, what did we say before? 77.80 was the last target. At that price, I want to sell 100 short. And the reason it's giving me a liquidation price is simply because this position hasn't opened. If this position was open, it would show net zero and I would have a profit margin basically, but neither one of these positions has been filled. So what will happen is, say it gets to 77.80 before it gets to 73.79, it'll open a short position of 100 and it'll actually close it if it actually goes back down to 73.79. So that's the way, just in short form, how to view a chart that we post, set a buy order, and not just set a buy order, actually average in your orders. Because let's say, for instance, you wanted a $500 order, you may put 100 at 73.79, but you say, hey, you may have a stop run, let's do 73.50. I would, like I said before, do more research at certain points to put this, but I would average it down 73.50, buy some more there, and let's see, and then it actually shows you here the price, the mark price that it would be if that position is open. So you don't even have to do the math of, if I got 100 at this price, 100 at this price, how much is my actual order? It shows you here. You have 200 contracts at 73.64, and that's the order value. So that's how you average down. Same thing, averaging up, same difference. If I say, hey, I want to sell it at 77.80, but also 77.90, I want another 100 in order to sell the whole position or to open a 200 contract position. That's what you would do. So yep, so 200 sales contracts at this price, it shows you what that price will be. So one of the things some of the keys you want to remember when trading is definitely low leverage at the price points that you want, and also average them down. And one of the things you can do is you can get rid of these orders, clear them. You can have up to 10 orders at once, and you can view how much you've made by hovering over here, so a lot of cool tricks. It's so much that goes into margin trading on this platform. This is a good start. This is part 1. In part 2, we will discuss trading the different altcoins, as well as get deeper into different strategies for scalping, as well as using the Discord group. Because like I've stated before, if you're in the Discord group, you can see a lot of the TA that we do is built on you finding a target or finding a position and then setting a target. And a lot of the explanations we give are what you should be going through explaining as you're about to make a trade. You should be talking yourself through it. You should have a plan. Like for instance, if you look at this, if you looked at this trading chart right here, and we were looking at the wick-off distribution, which is what this is, and he's explaining how this is the old trading range, and this is where we may go. This was uploaded a couple days ago. So basically, you could say to yourself, well, at this price, if it touches down below, I'll have buy orders ready. Or if it breaks up, there is a resistance here at around 77.80, which is where it did pop off, or where it did top out at. If it gets to that price, I'll open a short, and it'll I'll ride it down back to an old level of support or old level of resistance, so which will turn into support. So you want to talk yourself through that. That's why we definitely make sure we explain our trading strategies, but that's how you use BitMEX to your advantage, and that's how you limit your risk in order to actually maximize your profits. So going back here, that is all for me. And like I said, we'll have part 2 on Thursday, where we'll discuss actual strategies, use TradingView in order to do some scalping as well. And any questions you have, make sure you submit them on the members portal. so that we can answer them in a timely matter. And any questions on the Discord group as well, make sure you put those in the Discord group, and we'll answer those too. So once again, thank you for your time. I'm Bitcoin Zay, and have a good one.